like to clarify how to build a point and figure chart used in the Wyckoff method. Now, I know there's other point and figure chart methods that others have developed, but we're not interested in those, only in the traditional Wyckoff approach. So we'll be building figure by figure a 1-point figure chart. And you'll recall that a 1-point figure chart has a 1-point box size and a 1-point reversal. That'll become abundantly clear as we do the work in this segment here, build the chart in this segment. We're going to be using the recent 60-minute data from Caterpillar. Caterpillar is a New York Stock Exchange listed stock. It's also on the Dow 30, part of the Dow Industrials, and part of the S&P 500 index. So it's a liquid stock. It's actively traded. It's a good trading vehicle, and it's a good stock to show how to chart out a 1-point figure chart. Okay, so let's get started. You can see that on the left-hand side, I have transferred the hourly price swings from the 60-minute chart shown above onto this chart. And then on the right-hand side, we have space to create our point and figure chart. So let's begin. Our first set of data shows hourly price swings from 66.10 down to 63.61 and then back on up to 64.60. So we're just going to start in as if there's nothing else on the chart, which there isn't. For our purposes, we start at 66. So we plot a figure at 66. Now, obviously, the data shows 66.10, but we are only interested in the full figures, the full 1-point figure. So the 10 cents doesn't, we don't chart that. It doesn't matter to us, okay? The market goes from 66 down to 63.60, so it has to pass through 65 and also 64. Now, even though it goes to 63.61, it doesn't go through 63. It's a 1-point figure chart. All we're interested in is the full figures. And so we stop at 64 because 63.66 is larger than 63. Therefore, we cannot plot a figure in the 63 box. Likewise, the market goes from 63.61 and swings up to 64.60, but we're already at 64, so we can't plot any higher than that. We can't go up to 65 because the market didn't go to 65. So that's where we stop our point and figure charting for the day. The next couple of days show a swing down to 63.10. Again, we are not penetrating 63 or meeting 63. So we're above it at 63.10, so we don't do anything to the downside. However, the market rallies up to 72.71. That means that we are going to move up because we go through 65, 6, 7, 8, 9, all the way up to 72. Now, we already have a figure in at 65, so we can't go through it. We have to go around it, and that means that we start a new column. So we plot a figure at 65, and one at 66, and another one at 67, and 68, and 69, and 70, and 71 and 72. A nice move up, right? We don't, even though it's 72, 71, it's more than, say, 50, it's more than 72.5. We still didn't break 73 or meet 73. Therefore, we stop at 72. Okay. All right. Our next set of hourly price swings on the next day. We go from 72, we have a little bit of a reaction. We go down to 69.15. That means, again, we can't go through 71 because we already have a figure plotted there, so we create a new column. and we come down 71 to 70, and nope, we don't go to 69 because 69.15 is larger than 69 figure. We didn't penetrate or reach 69 even, so we stop there. So notice that the market in its actual price movement went from 69.15 back up to 70.71. Well, we're already at 70. It didn't reach or exceed 71, so therefore we stop at 70. Our next day's set of swing data shows the market coming down to 69, but we are already 69.85. We don't penetrate 69. We're already at 70, so we don't do anything. However, the market does rally up off of the low of 69.85 and goes to 72.49. Therefore, we've already got a figure at 71, so we start a new column. And we go up 71 and back up to 72. The market does go a little higher to 49, but it doesn't reach or exceed 73, so we stop at 72 for the day. The next day, the market falls back to 70.86. That means that we come down through 71. We have a figure there already, so we start a new column. So we go to 71, and then the market rallies up to 71.53. We didn't meet or exceed 72, so we stay at 71 for the day. We only paint one figure in for that day. Next day, the market comes down to 69.26. So it goes through 70, but it doesn't go through or reach 69. It stays higher at 69.26. Then it goes back up to 71.03. That's enough to that's enough to create a full figure. We've already got a figure at 71, so we create a new column and we stop for the day. Next day is kind of a repeat. We drop back down to 69.57. So, whoops. We can put a figure in at 70. Can't do it at 69 because we didn't reach or exceed it. But then we push back up to 71.06. We already have a figure there, so we create a new column, and that's the figure charting for that day. The next day, kind of another wash and repeat. We come back down to 69.76. So we would plot a 0 here, and then it goes back up to 70.92. Well, we're already at 70. We didn't reach 71, so we can't start a new column going up. Okay, so we only plot that one figure for that day. The next day comes down to 69.11. We're already at 70. We didn't reach 69, so we don't plot anything there. The market rallies back up to 69.99, obviously a narrow range day. We didn't get to 71. We're still stuck here at 70. So actually no figures get plotted for that day. Now, on the 11th day, we come down to 68.51. Finally, we get to plot a figure in the 69 level. Then it goes back on up to 71. Breaking 71 to go to 71.19. We already have a figure in 70. We have to go through that, so we create a new column, 70 and 71. And then we stop for the day. On the next day, the market returns to the 69.65 level. So we come back down through 70, and we create a new column because there's already a figure there. Then we can't go down further to come back to 69 because 69.65 is higher than 69. But the market does go back up to 71.90, so we can add an X in our 71 slot. And that's it for the day on that day. The next day, the market falls down to 67.81. Has a pretty interesting day here. So it has to go through 70. We have a figure there, so we start a new column. 70, 71, I'm sorry, 69, 70, 69, and 68. Now notice that 67, 81 is doesn't allow us to go and put in a figure in the 67 column, but we do put one in on 68. Now the market rallies up to 72.83. We already have, so now we need to go up, but we already have a figure in 69, so we start a new column. And it goes through 69, 70, 71, and 72. The market goes up to 72.83, but it does not reach or exceed 73, so we stop at 72. And then the market has another swing down to 70. And so we create 70.07. So we can go one figure, 71. We can't go all the way to 70 because 70.01 is larger than 70. And that's it for that day. The next day sees the market push up from the 71 level to 72.43. And so we put an X up there. Then it falls back to 71.08. And we again come and put, oh no, I'm sorry, 71.08. Yeah, no, we can't do that, can we? So we are at 72. And that's it for that day. Now, the next day, now we can put some more data in. The next day, the market slides down to 68.34. And we were at 72, so we have a figure at 71, so we start a new column. And 71, 70, 69, and we stop there, right? We can't go all the way to 68 because 68.34 is larger than 68. Then we go to 71.09, so we start a new column because there's already a figure in 70, so we go to 70 and 71.09. We penetrate 71, so we put a figure in 71. And then we fall back to 70.24, but that's not enough to get us down to the full figure of 70 because it doesn't reach or exceed 70. It stops at 70.24. So we stop there for the day. The next day, we see the market rallies up to 72. We were at 71. We had stopped at 71 because we couldn't go down to 70. So we can put we continue that column by putting in another X at 72. The market then falls back to 70.55, so we come back to 71. We can't go all the way down to 70 because 70.55 is larger than 70. And then the market rallies up to 71.34, but that doesn't mean much for us on our point and figure chart because we can't push up to 72. It's not enough. So we stay here at 71 for the day. Oops. The next couple of days now show the market starting off at 71.63, and we are already at 71, so we can't do anything there, can't go down or up. Then it rallies to 75.32. And so we can go to 72, 73, 74, and 75. And then the market ends at 75.70. Seems like there should be a pullback there. Let me check the data here. Hang on. I think I just transposed these. It went up to 75.70 and then came back to 75.32. Going up to 75.70 still doesn't get us up to 76. So our point and figure chart is okay the way it is. And ending at 75.32, we didn't get down to 74, so we stay here at 75. The next day, the market rallies a little bit higher. It goes to 75.93, but that's not enough to reach 76, so we can't go up, and then the market falls back to 74.33, but that's not a full figure. We need to go to 74 or lower to be able to paint a zero here. So we just stay. We don't add anything to the figure chart on this day. The next day, again, we rally up to 75.56, but once again, we're already at 75. We didn't go a full figure here, so we can't go up. However, the market starts to fall down a little bit and goes to 73.21. 71, now we can start to add some figures to our point and figure chart. We already have 74 in our column, so we start a new column, 74. What's the low here? 73.21. So we stop there because we didn't get the full figure down to 73. And then it rallies up to 74.53. And again, we stop here at 74 because we didn't move a full figure. So that's it for the point and figure chart for that day. The next day, we're at 74. I'm sorry. Excuse me. Hang on a second. Okay, that just didn't shade in there. The next day, we've been at 74. The market falls to 72.33, so we can come down one full figure, but not more than that because 72.33 is higher than 72. But we come down the full figure of 73. Then the market pushes back up to 73.84, but that again is not a full figure. It has to reach or exceed 74 for us to put a new X, start a new column and put an X there. So we stay here at 73. And then the final day on this chart, or days on this chart, sees the market fall down to 71.48. And we're at 73, so we can add some figures to our chart. We can add 72 in there. We can't go lower than that to 71 because 71.48 is larger than 71. And we are also stuck here at 72 because 72.85 does not allow us to create a new full figure up to 73. All right, that's how we create a point and figure chart off of the intraday 60-minute hourly or hourly price swings. That should be pretty clear. It may take you going through it a couple of times to really understand it, but the basic idea is that we move, when we're using a 1-point figure chart, we move a full point each time we go to chart a figure on the chart. If we don't move and you saw in here at some point we're 69.99, even though we were only 1/10 of the way, 1/10 or 1/100th, 1 penny away from 70, we could not put a full figure in at 70. And so we could only put that figure in at 69, and that was it. So a full figure is required, and if we already have a figure, when the market changes direction, if we already have a figure in that slot, we have to create a new column, and then we go from there, either up or down. I hope that's clear for you. That's basically it. It's fairly straightforward and fairly simple, tedious to do, certainly, but that's how we create point and figure charts.